Good Monday morning. I wanted to come to you to give you a little bit of a market update since it is August 1st. We're more than halfway through the year and school's getting ready to start. So for those kids who are excited about this, awesome. For my family, not so much. But I hope that you had a wonderful summer and that you get some last minute fun activities in before summer is officially over. So new home sales did drop in June. Of course, that's because of declining affordability. As you know, prices are up. And so, of course, that's affecting the sales themselves. Pending home sales slipped 8.6% in June, and that's really just due to climbing mortgage rates. So as mortgage rates go up, people tend to not buy as often. Of course, people still need places to live. And so, if you need a place to live and you're tired of renting, it is definitely still the time to buy because prices are still going up. So one of the cute little sayings that we have in the mortgage business is marry the house and date the rate. Why? Because you're locking in today's home prices because they're going to be higher next year. And you're getting, you're going to be getting a higher interest rate. However, it's only temporary because guess what you can do next year when rates are predicted to go back down again into the fours, hopefully lower, but nobody knows, right? Otherwise, I would be retired because my crystal ball would be working so wonderfully well. So all of the economic indicators, however, do point to that. So that's just a good positive note that yes, you'll have a slightly higher interest rate now, but into next year, you can always refinance and get your rate down lower, which means your payment drops. So you keep that house at that price for today's pricing, but then you get to actually have a lower monthly payment down the line. So the other thing that's really great news is it looks as though mortgage rates have topped, meaning that they are at their cyclical high, which means basically for you, if you have not already purchased a home, that they've reached the high and things are starting to get better. Of course, as the Fed raises those short-term interest rates, I know this sounds counterintuitive, but mortgage rates do tend to go down. Why? Because when the Fed raises short-term interest rates, what they're doing is they're trying to control inflation. And inflation and mortgage rates are like oil and water. They do not get along. So therefore, as they raise those Fed funds interest rates to try to control inflation, the mortgage-backed securities market knows it and improves. The investors like to see the fact that the Fed is finally, I say finally, doing something about this. So while you may see on the news, this is bad news for interest rates, it is for your car and it is for your credit cards. I'm sorry to tell you that those expenses will become more expensive as far as interest rates on your cards, but keep an eye on Let's Talk Mortgage Pro because lately I've been talking a lot about credit cards and how to save some money. Of course, the other thing is home price growth is still going up. However, it is not as high as it was. So we're seeing what's called a deceleration, meaning that you're not seeing the home prices go up quite as fast. However, they still are going up. So it's very important for you to understand the fact that, again, if you're looking to buy a home, the sooner the better. The other thing is the inventory is up, which also is wonderful for you if you're trying to buy a home. Why? Because you have more choices. Yay! So that's awesome. And of course, the other thing is that you might see a softer economy coming soon. Why? I've been talking about it for a couple of years now. Whenever we have as much spending as we've had in the government, yes, a recession is officially here because we have had 2 consecutive quarters of negative growth domestic product, otherwise known as GDP. That means that the economy is not growing, it's actually shrinking. And that is the textbook finance definition of a recession, 2 consecutive quarters of negative GDP. So it's really interesting out there for sure. I'm sure that you felt a little bit of pressure on your gas prices as well as your electric bill. And the only thing I want to warn you about is come October is the tax bills do come out for property owners. So be sure to watch your mailbox. And remember, if it's included in your monthly payment, you do not have to pay the bill. However, what you do need to pay attention to is how much you're currently escrowing for taxes in your monthly payment. Watch that because if you take that tax bill, you divide it by 12, and the number is not close to what you're currently putting in your escrow account, you will have a shortage, which means that December, January, when escrow shortage analyses go out to you, you're going to have to write a check. So watch that. Be really, really careful and pay attention to your mailbox. If you have any questions, just reach out to me. All of my social media channels are Let's Talk Mortgage Pro. Have a great day.